10,000-foot view and then working their way down to each processes and finally picking and choosing the right tools and softwares that fit into the entire accounting system. So, without further ado, let's get started. So we'll get started with the accounts payable process, or what's most known as, paying the bills for the business. Now, paying the bills typically starts with getting the bills in the mail, right? We get our mails every day of the week, and then from those mail, we typically gather various different bills from different vendors. Now, these bills can be for services that we bought, outside contractors, or goods that we bought, and these are bills and no one likes them. But we have to deal with them, and we take these bills and maybe once or twice a week we enter it into the accounting system that we use, the accounting software, should I say, that we use, and we enter them in so we can keep record. And let's say you use QuickBooks, right? So QuickBooks is really a software, a piece of software that you utilize, or a tool, we would like to call it at Deep Sky, in your accounting process. Now, once you enter in QuickBooks, again, maybe once or twice a week, you actually generate checks, and then the CEO signs it, and you eventually mail those checks out to your vendors, paying them the bills that you owe, and be done with it. So that is what we call, in fancy accounting terms, the AP, or accounts payable process, right? So a process is a series of steps that you go through to get something done in a business. Now, another more popular and definitely a very useful process is the sales, which is typically outside of accounting, but it's still a process, a sales process, and then the accounts receivable process, which is the process of, getting paid. So the sales process typically starts with the prospect coming in wanting to buy something from you. Say they want to buy a service and they ask for an RFP, or a request for proposal, and your sales team, let's say they use a CRM software called Salesforce, right? Salesforce is a really popular CRM tool. It's a cloud-based CRM tool, and let's say they use a CRM tool to generate a quote. And this quote eventually get translated into a contract, a signed agreement, so both parties are happy, and now we have a contract, and we do the work, right? And this contract will eventually be brought into the receivable process, and your accounting team, again, in their accounting system, will generate invoices to be sent to the customer so we can collect what is owed to us. And we mail those out, and eventually we receive our money. Yay, we're happy. So we go out, grab a drink because we got paid. So if you look at this, these are really three